Welcome, folks, back to the show. We want to talk about self-employment and how that can affect, or better yet, what loan options are out there for you. So we're gonna just dive deep, and my special guest today is Warren Goldberg. Warren, how you doing?
Well. How are you?
All right, I'm a big wrestling fan, so I have to ask the obvious question: are you related to Bill Goldberg by any chance?
Not in the least. I have been asked that many times. Not even my body structure is similar.
All right. Well, the people that come to hear about my wrestling stuff, or if you relate to him or not, let's talk about self-employment. Basically, what programs are available for anybody who's a self-employed employee.
So there's a lot of different products and programs that are out there. And to be very honest with you, most lenders tend to have very similar, if not the same, products and programs. It's not really something unique to one lender or another. You have the traditional underwriting guidelines, Fannie, Freddie, FHA, where they look at tax returns and things like that. And then you have some other programs out there where if the borrower doesn't necessarily show all of his income, we can use business bank statements and show cash flow through the bank statements, or even personal bank statements, cash flow through personal bank statements in order to calculate a qualifying income. And now they also have something where the borrower can create a profit and loss statement for their company, and we can utilize that. Not something necessarily created or signed off by their CPA, but the borrower created themselves. But it's not something necessarily that I have that's any different than what other banks have. One of the ways that I've differentiated myself is that I understand how cash flows through tax returns, or the picture, the story that these tax returns show, whether it's personal returns, whether the borrower has a corporation or an LLC. And I can't tell you how many times I've worked with borrowers who have been denied a mortgage by the quote unquote their bank. And then they come to me and I go through the tax returns and I'm able to extract more qualifying income in order to get them to get it approved for the mortgage. And this is something I do all the time. I mean, just now I just hung up the phone with an underwriter who was not following the tax returns. These clients, they are rather affluent. They have created trusts for a lot of their assets, and they are living off of the dividends and interest of those trusts. And the tax returns are, each one is that thick. But the underwriter was not being able to follow along, and I had to actually go through it and show him. That's something that you don't get at most of the banks. Most loan officers don't understand how to read tax returns. Most underwriters are really just trained to look at certain boxes on the tax return and take a number out of that box, put it on their spreadsheet, and they come up with a number that they really aren't familiar, or they don't really understand the big picture as to how they came up with that bottom line number. So, that's really where we shine.
All right. Well, that's the whole purpose why we're doing this series. Is basically not everybody fits into column A or column B. You need a specialist who's been around the block many times over, and they can actually look at the picture and say, all right, well, here, based on the information I have in front of me, here's the options that are best suited basically for your particular situation. And for someone who's self-employed, walk us through the process. Basically, somebody sees this video and they want to sit with you, and what's the process like for them?
So the first step of the process is the initial contact and the intake. I will usually spend 20 or 30 minutes on the phone with someone talking about what their goals are, what they're looking to do. For the purpose of this program, we'll assume that they're looking to buy a home. Where are they buying? What are the price numbers that they're looking at? What do they do for a living? How do they derive their income? What kind of assets do they have? Where are those assets? How much of those do they plan to use? Things like that. And while we're talking to them, or while I'm talking to them, I am kind of creating a picture in my mind. I'm taking scrupulous notes. But I tell all my clients, I use analogies a lot. Specifically, I use a lot of medical analogies. So I tell people, just like if you call your doctor and you say, Doc, I have this pain that's radiating down my shoulder into my arm. He's not going to give you a diagnosis over the phone. He probably has a good idea as to what it could be. God forbid you're having a heart attack, or maybe you just have tennis elbow. but he's going to want to run tests. Let's come into the office. Let's do an EKG. Let's do blood work. I say financial health is very similar. Even though I have a sense as to what everything looks like, the devil's in the details. So, Mr. Prospect, I'm going to send you a list of documents that I need up front. I am a firm believer of, the old expression, ripping off the Band-Aid quickly. So
Yes.
my practice or my modus operandi is not to ask for one document and then come back and ask for another document and come back and ask for another document and, bleed these people like they complain, what happens at the banks. I'm going to say, here's everything we need based on this conversation. And if you give me everything I need that I asked for, chances are I'm not going to need anything else. If they send it to me, I will do a full review and analysis. We have a discussion as to what I see, if there are any issues, how we're going to address those issues, and ultimately, by that point, the second or third conversation after I reviewed everything, we're typically able to issue them a pre-approval.
Okay. The common question that people ask, especially for self-employed entities, that's what I'm calling them right now. If they wanted to purchase a home not under their name, if they wanted to buy something under an LLC, is that possible?
It is possible. So both Fannie, Freddie, and FHA have certain limitations as to what type of an entity you can put the deed in. There are some other lenders, non-traditional lenders, that will allow you to do that a lot easier. But typically, you're going to pay a premium on the interest rate to do that. So I tell people, one size never fits all. If you are, just to illustrate the point, if you're a first-time home buyer, you don't have a lot of money, you don't have a lot of assets, and you're for some reason concerned about having this house in your name, you probably don't have as much to worry about as you think. Close with the house in your name. After the closing, you could always transfer the deed into a wholly owned entity, meaning an entity that you wholly own, and the banks probably won't give you any issue. If you are much more sophisticated, have lots of properties, lots of assets, self-employed, and your concerns are very warranted, there are some other ways that we can, talk about doing that, and we can discuss the pros and cons. Maybe it's worthwhile for them to pay a little bit of a premium on the interest rate or closing costs to do that. Maybe it's not. But at least we'll give them all the information they need so that they can make a rational and informed decision.
I think the key thing you kind of hit it on the head is you have to have the conversation. So, like you said,
Yeah,
it's not one size fits all.
exactly.
You have whatever your concerns are, whatever scenario you have running through your head. I'm talking to the viewers. Make sure you have that dialogue with your professional. Obviously, your professional has been around the block. They've seen and heard it all, and they can best guide you where you need to be, what system, what program is going to work best for you. And the whole thing is basically to give you options, and then you make an informed decision what you feel comfortable with. And
Correct.
again, you have to have the dialogue with your professionals. We are not mind readers. We can't read your mind and go, boom, do this and do that. You have to have an open dialogue.
Correct. And don't necessarily think that by going to quote unquote your bank, I have my checking and savings account at Chase or Wells Fargo. I've been there for 10 or 15 years. They must know me and love me, and they're going to do all sorts of wonderful things. Chances are the loan officer there is really, just a glorified salesperson. They don't necessarily have the financial background to talk to you about the financial planning aspect, whether the deed should be in your name or someone else's, how to protect, yourself, and on and on and on. So, most importantly, whether the person that you wish to work with works for a small entity or a mega bank, make sure that that person truly is a professional and has the knowledge to be able to truly advise you accordingly.
So what you're saying is do your due diligence.
Oh, yeah.
Seek referrals. Find out from your realtor that you're working with who's best suited basically to help me with this particular. This is what I'm looking to do. And obviously, if your realtor's been in the business for a while, they'll have connections. And I'll just bluntly say it, talk to Warren. Just talk to
That's a great
Warren.
idea.
Yeah. Just call Warren. That's the new show.
Oh,
All right, Warren, any other advice you want to give people basically that, they might have some misconceptions in their heads that you want to put lay to rest right now regarding
a lot of people who are looking to purchase a home, one of the first questions many people ask is, what's your rate? And I explain to them that, what they're chasing is the wrong thing, that they're going after the wrong thing. Rates are driven by loan amount, loan to value, meaning how much of a percentage of the purchase price you're putting down. It's based on credit scores. And frankly, it's a moving target. So, if you're looking to, if you shop rates today, the rate that someone tells you today is not necessarily going to be the same rate tomorrow, nor is it going to be the same rate that you get when you apply for the mortgage, nor is it going to be the same rate that you get when you actually lock in. And frankly,
Can I make it simple for people?
Sure.
Just make it simple. Yesterday's rates are not today's rates.
Yeah.
Simple as that.
Yeah. And honestly, most of the banks are going to be competitive with one another anyway.
It's all about the service, and pretty much people should be more focused on basically what you're comfortable paying monthly. Your monthly payments is what you should be focusing on.
Yeah. And look, you've been in this industry for many, many years. You've seen all sorts of horror stories as well. People who are buying a house should surround themselves with an excellent team of advisors, a great real estate attorney, okay, not an attorney, but an attorney who specializes in real estate, a great realtor, a great mortgage person who's going to help them to navigate around all these different landmines that pop up, whether they're title issues, people potentially, changing jobs, losing jobs,
Yes, divorce.
Divorce, where the money is coming from for down payment and closing costs, and an ounce of prevention is worth a pound of cure.
All right. You know what? With that being said, you gave us a lot of nuggets to think about. Now, for the person who's hearing this, seeing this, how do they reach you? How do they get in contact with you and get a consultation with you?
Probably the best first step is go to my website. It's mortgagewealthadvisors.com. There's a ton of information on the website that tells you more about who we are and what we do. You can also contact us through the website. You could also just call me in the office. My office number is 516-584-7218.
All right. Any last word advice that you want to give to anybody who's watching this? Anybody who's thinking about buying, they want to get off the shelf or get off the ledge and actually purchase something now or sell.
One of the you'll probably agree with me when I say this. One of the big questions I hear a lot is, prices are up, interest rates are up. I don't know if it's a good time to buy. Should I wait another year? And on and on and on. And I've been hearing that question for 30 years. I tell people the best time to buy is when you are ready to buy, when you need the space. In terms of whether you should wait or not, most people are not going to be able to save enough money during the course of the year to outflank inflation. Meaning, if you're looking at a $600,000 house this year, but you want to save up more money for a down payment, even if you were able to save $30,000 or $50,000, chances are that house next year will be selling for $675,000. So, don't wait. You could put less down. You want to make sure that whatever house you purchase, it fits your budget and your lifestyle so that you're not necessarily house rich and cash poor. And even if you settle, a little bit on the size and scope and of the house, no one said you have to live there forever. You could live there for a number of years and trade up like most people do.
Well, Warren, thank you so much. That's sage advice. I have nothing else to say. You literally have the last word. So how do you want to end this?
Just reinforce. Make sure you surround yourself with an excellent team of advisors. An ounce of prevention, talking to these people ahead of time and preparing and positioning yourself. It's so much more important than just shopping rate, because at the end of the day, most people who shop rate, it's an exercise in futility. They wind up not getting what they think they're getting.